With the State Bank of India and Moody's paring down their estimates of India's GDP growth, there are serious questions being raised on where India's plans for a $1 trillion economy truly lie. Now the SBI in this report has said that they expect the GDP growth to be lower at 4.2% in the second quarter, with GDP dropping to 5% from an expected 6.1% earlier. Joining us now, the author of the report, Dr. Soumya Ghosh, the Group Chief Economic Advisor of the State Bank of India. Dr. Ghosh, thanks very much for being with us. In your report, you've said that that the acceleration rate for 33 leading indicators, which was at 85% in October last year, is down to just 17% in September, and that this decline is gaining traction from March this year onwards as a trend, as a pattern. Would you therefore refer to all of this as an economic crisis?
No, I will not call it a crisis, but I will call that this is basically a part of an demand slowdown, which is now more significantly entrenched than what was anticipated. And the situation actually has become a little more grave because of the fact that the global economies are in a synchronized slowdown. If we actually look into the global growth numbers across all countries, you will see that the growth decline is in the range of 22 basis points to 716 basis points, and India actually cannot be immune to that. So my sense is that a demand slowdown coupled with the global slowdown, the global uncertainty, and all these factors have actually put the brakes on the Indian economy.
Now, even if you look at the index of industrial production, the growth number in September was negative 4.3%. Is this your greatest single cause of concern, industrial growth?
Yeah, see, industrial growth is of course a point of concern, and it was expected to be negative in this month, but the extent of negativity has actually surprised the markets. But the important thing is that there has been a lot of industries, there has been a demand slowdown. The automobile sector is one of them, the court sector is one of them. Another factor which is actually hurting the economy is basically the NBFC sector, because that credit link has broken down. So there are a lot of issues which are impacting the economy, and most of the steps which the government has been taking, that is long term in nature, and that will take time to permeate through the system. So in the meanwhile, I think the low growth rates, we may have to live with these low growth rates for a while.
So now if you look at sectors, the auto sector, for example, continues to flounder. Year on year, sales are down. How bad is the situation over there? Because it's cliched, I keep saying this, but the auto sector in a way is a driver of the economy.
Yes, that's a major factor, and the auto sector, which if we actually look at the global data, all auto industry across the globe, including China, has been experiencing a deceleration. My sense is that this deceleration could continue for the next maybe couple of months. Maybe by March 1, these emission norms becomes clearer and implementable. The industry could actually look up for better numbers. The other unfortunate point of disruption very recently has been the unseasonal rains, so which has destroyed around 40 to 50% of the crops across states like Maharashtra, Madhya Pradesh, Karnataka, Punjab, Gujarat. So what it is going to do is in the coming days, you will see that the inflation numbers could actually go up. But if you look into the pricing power, for example, the WPI and the core CPI, that will actually decline. So this is one more disruption which has happened. So I think agriculture rural sector was somehow looking up after a very good rainfall, but the excess rainfall actually has put the brakes on this sector, apart from the construction sector and also on the mining and the transport activities.
Now, jobs in the auto sector, it's sort of related to what you were talking about. The fear is that as many as 10 lakh jobs may have gone. So, in as much as we talk about GDP numbers, shouldn't we really be talking about unemployment?
See, I think the job numbers are always, a point of contention and disputable. So, but the point which I want to highlight is that the auto sector is one of the highest employers in India. I think around 30 million or so. So from that point of view, I think the 30 lakhs, I think. So from that point of view, and a large part of the auto industry is also contractual employees. So it is natural that if there is a disruption in the auto sales, there could be disruption in the employment activity. So that could be also a fact that is getting reflected on the private final consumption expenditure, which has now come down to 3.1% when the last numbers of April to June was released. So there will be some disruptions, given the fact that auto industry is one of the largest employers in the country.
So now you've said that you are revising your GDP forecast for the financial year 2020 to 5% down from 6.1% earlier. You said that you expect the growth rate to pick up in the financial year 2021 to 6.2%. Why are you so optimistic about 2021?
See, I think there are a lot of whatever the steps the government has taken in between. I think first of all, the first thing of optimism is basically the fact is that even if you look into the global uncertainty index, India is now far lower in terms of the global numbers. The second thing is that in the next couple of months, you could actually see resolutions coming in for some of the stressed entities, which is already hanging fire in this in the courts. So that is another point of optimism. The third point is that by March, once the budget is presented, once you have the numbers in front of you, a lot of uncertainty will pass in terms of the fiscal policy, in terms of whether there will be a tax cut, tax rebates. So that thing also will lift up the consumer sentiment. So hopefully by next year beginning, once things get sorted out, and typically and most importantly the auto industry, I think things will start to move up a little bit towards the first quarter of next year.
So, if you look at the telecom sector and NBFCs, how will the crisis in confidence in the financial markets be fixed if there's a greater central bank liquidity, for example, for NBFCs?
No, I think the government is looking into sector-specific initiatives. For example, you gave the example of telecom. Yes, telecom is an example, but I think the panel has been set up to look into the problems of the sector. Apart from the telecom sector, I have already talked about the NBFC sector. We need a resolution for the NBFC sector at the earliest. Another sector which basically looks attention is the power sector. If you look at the power sector numbers, the DISCOMs are not buying power, and there has been a contraction in demand in power in the month of October. An economy which is expanding, and if power demand is contracting, that's not a good sign. So I think there are sector specific issues. The government is trying to look into it, and hopefully again that's my optimism, is that once these issues get sorted out in the next couple of months, maybe by the next end of this fiscal, I think things will start moving up from there about. The real estate sector has already been addressed. Maybe there will be some more steps coming. So it could be a package of steps which will lift the sentiment.
Now, your research shows that the increase in digital transactions post 2016 also played a huge role in the decline in the money multiplier. There's been a substitution from currency, and a lot of it has gone towards digital payments. Perhaps not as much has been stated. That could be an exaggeration. But to what end has this had an impact in your calculations?
See, I think any transit, this is basically some sort of an interesting monetary dynamics which is playing out. So the money multiplier depends on the value of the money multiplier, depends on the substitutability between currency and deposits. So in case if you are substituting from currency to say other modes of transaction, which could be digital, which could be deposits, money multiplier could actually go down. So in this case, what is happening is that there has been a change in the money multiplier. The money demand has not been growing. So what is happening is, on the same level of money supply, the money demand, through the theory of money multiplier, the amount of money demand which could be created, that is not much. So that is actually also playing a role in this financial intermediation.
What about measures which the government has taken? For example, a lot has been said about corporate taxes, and yet there are others who believe that that the tax regime is not friendly enough, either at the level of personal taxes or even corporate taxes, and tax cases keep coming up in the courts. For example, we've seen the huge Vodafone case as well. So the tax raj, as it were, does that continue, or do you believe that what has been done as far as corporate taxes are concerned is genuinely a big step forward?
Yes, I think that's a very good question, because cutting corporate taxes again will aid in the long term, it will aid investment with a lag. So, do not expect that the investment will pick up immediately in the next quarter or so. Investment could actually pick up in the next year once the corporates also finish the deleveraging cycle. So, I think this will also help the corporates to post better results in the coming quarters, and that could be an indication that things are starting to get in control. So, but regarding the point which you made in terms of the taxes, I think this monetary policy steps that the RBI is taking is fine, the fiscal policy steps that the government is taking is fine, but all these policies has to be supplemented with the sector specific initiatives which I just talked in the earlier, because until and unless it is a comprehensive tackling of the entire thing, I mean that will actually give a feel good factor to the international investors and the domestic community.
Dr. Ghosh, one final question to you. These GDP numbers you projected downwards, but there is a suspicion that given the new series of data, the numbers that are being projected even now may not be realistic. How would you respond to those who say that the GDP growth numbers are in fact even lower than what you have said they are?
No, I think the GDP way they have been measured in terms of the value added, I mean the new series actually goes to the SNS convention. So, there is actually no problem about that data, and there is also a change in the base year for every economic, every GDP every 5 years. So, from that point of view, possibly now the time may have come for a change in the base year, but I still believe that is a matter of debate which is being contemplated by the CSO, and no final decision has been taken. But the way the GDP is estimated currently, it is actually as per the international accounting norms. We can differ on why it is not mapping into the indicators, but if you look into my report, this actually clearly is mapped into the leading indicators, and it is showing very good correlation in terms of the co-movement of the two series.
Sure. Thanks, Dr. Ghosh, very much for joining us. Lots of key concerns about the economy. You wouldn't label it a crisis just yet, but clearly the indicators there point to something which we do not really want in this country. Thanks very much, sir, for being with us.